Let me ask you a question. What is your most valuable asset? What do you consider your most valuable asset? Let me give you a suggestion. I've heard this. People have said this. The home, it seems to be the first most prominent choice. I've had people say the car, investment account, bank account. What is your most valuable financial asset? How about your ability to earn money? Now, for we retired folks, our ability's over us. We're talking about folks at work. What is the value of your earning potential? Let's use an example. Let's say you're 40 years old and you're earning $6,000 a month and you never get a raise. Between now and age 65, that's pushing $2 million of earned income. Let me put it this way. What if we had a goose at home that laid golden eggs, $6,000 worth a month? Would you insure the golden eggs? Would you insure the goose? And how much would you insure for? I think I'd do $2 million on that. That's an asset. So what we want to do is consider, if we've got this great earning potential, how much of it is insured? You know, we tend to insure our homes to the value because the bank requires it if you've got a mortgage. And if you get older and you got your mortgage paid off, we insure it to value anyhow because we don't want to pay the loss. The car's insured to value for most of us with the collision comprehensive because they got a chart and they go by that. But the ability to earn money, rarely do we have enough of that. Now, if you work for a company, you've got group insurance, you don't really have a say-so because it's a formula. But what about the difference between what the formula is going to pay and what you actually have? Now, let me tell you something else. And this will be on my graphs of my worksheet. What if disability strikes you? What will you do? What you going to do about money? Capitalize that out and see if you come up with that $2 million figure that maybe you ought to have that insured. And I'll tell you this, if you work for a company and they give it to you, that's good. If they don't, you better go get it. This is the single most overlooked area in financial planning that I have ever seen working with private business. We just seem to overlook this type thing. It's an interesting statistic that the ratio, if you consider that most of us insure our homes, and there's a 1 out of 1,200 chance, it's called a 1,200 to 1 ratio, we'll have a loss. A car, greater risk, 1 in 250 chance. When you commit to your potential loss of income to a disability, 1 in 4 of us, 1 in 4 is going to have something happen before we hit 65. And as I just showed you an example, it could be a $2 million hit. It's not just a monthly income, it's a $2 million hit. Here's a good website for you to go visit. It's called disabilitycanhappen.org. Let me say it again, disabilitycanhappen.org. Got some more coming for you soon.